Hi everyone. Today we are finally building our real active markets algorithm. It's gonna place real orders for me on the 10 most active markets. So I'm working in a split screen today. Here on the left side we're gonna build the algorithm and its parameters, and on the right side we'll be gathering some data and looking at graphs, and all of that will feed into our algorithm. I already had a couple of these right here, but I chose to hide them and build one from scratch. That's usually a good idea to start fresh. So shot is only for a single traded pair, but we're using shots group since we are going to trade a number of them at any one point in time. Emulation we skip for now because we are building a real one after all. Now the name. This looks a bit confusing, but this is actually quite useful. SG stands for shots group, and here we have some codes for different parameters of your algorithm. If you hover your mouse here, you can take a look at them. I'll leave them as they are, but there is one modification that I want to make. At the very beginning of my algorithm, I will put A for active markets, and then when I make the emulated one, I will put E for emulation. This way I will be able to more easily differentiate between them, even though in reports it shows you the symbol for emulation. So this is gonna be our name. We'll see how it turns out in the end when we save this algorithm. Next, we're gonna go again through the setup of the algorithm, and I will focus only on those parameters that I know what to do with, and the other ones that I'm not sure yet, I'll leave as defaults. So here, the next parameter is trade latency, which we have already talked about. It's 1 second here, which means that if the software detects that the trade latency is over 1 second or 1000 milliseconds, it stops the algorithms, preventing you from getting some delays in opening orders or moving your orders or closing positions. I'll leave this as default because I do not have much basis yet for changing it one way or the other. Auto restart, yeah, that's when a trade is done, the algorithm places yet another order. Here 30 seconds seems a bit much to me. Since we are on the active markets, we want to catch them in the act as they are going all up and down with shots, so I will put 5 seconds here. It's been in my previous algorithm 5 seconds. It seemed to work quite well. These are to open the graph when the position is opened, and this is to open the graph when the position is closed. If you are at the terminal when the trading is going on, you will be immediately and visually informed of a trade happening. Now, again, the important piece, market filters. You already know that. So we're going with USDT margined contracts. Now for quoted asset, we put USDT. Now we have a whitelist option and a blacklist option. You may remember that last time I wanted to blacklist some coins, so let's check this out. I wanted to remove those coins that had very low leverage. Let's try and look at the management tab here. There you go. Sort them by leverage, smallest ones on top. And here you can see a different story than in one of the previous videos. Now our good friend MTL is at leverage 15. It's actually been downgraded earlier today, and I have stuff to prove it. Here, Moontrader actually notifies you, and it forcibly changes the leverage that was here. It used to be 25. Now it's 15. So here you get this information. You actually get it twice. I don't know why, but that's the way it works. So you may remember that last time MTL during the drop of Bitcoin was pretty much the only coin that actually gained in price. I think it was about 13% or something. And just so happens that I have the MTL graph open here, and it's going quite wild. Let's, just for the fun of it, check out this shot. It's about 0.7%. But the leverage is kind of small. I decided to exclude the 10s last time, but 15 is close enough to 10 that I want to blacklist it. So in the blacklist we have AMB, STMX, and MTL. Let's type them in. Okay, now we are done with our blacklist. The whitelist here, if you put anything in here, then these will be the only coins traded with this algorithm. This is not what we want here. We want them to be dynamically selected based on the market activity here from Market Live. Now, next, order limitation, none or exchange quantitative rules. Apparently, there is a limit on how much Binance is willing to handle in terms of your simultaneous orders, API requests, and it has these rules that you cannot exceed them. Actually, down here at the bottom, you have an indicator of how much of your API queries you're using at this particular moment in time. 2400 seems quite a lot, but there is not too much activity going on right now at the moment. But still, I'm going to be trading 10 most active coins, so 10 orders on each side, the buy and the sell. I think we are more or less safe. So I think that Moontrader watches out for these rules, and if you get within a certain distance from reaching the limit, it shuts off the algorithms. That's not what we want. I think 20 orders are not such a large number that the interface wouldn't be able to handle. And if you exceed your limits, actually Binance will ban you for a certain amount of time from trading. We don't want that, but I don't believe we're going to be that intense so that we get banned. Alright, next we have something called delta check frequency. I'm still not sure exactly what this is. We'll leave it alone. Now here is our active markets filter. We'll add one. Here I'm reminding you that we want to look at 5-minute deltas. Well, that's where I want to look. Whenever you make your own, you choose your own. This is basically this one right here. Let's hide this so that we have a better view. So the 5-minute absolute delta, which in Binance terms is the amplitude. Here are the most active coins. Well, these are the most inactive. The most active ones are here. So we'll potentially be trading all of these, unless the ones from our blacklist come into one of the top 10 spots, then it will be ignored. I'm actually wondering if one of those blacklisted comes within the first 10, does it really get ignored and we are trading only 9 pairs, or the algorithm goes one down and trades the 11th. I think it's the first option, but maybe we'll have a situation where we can verify that. Now, I decided to do 10 active coins. For now, we're not going to be skipping the first ones, which are the most active ones. Maybe I'll get burnt on that, but, we'll do it from experience, not from theory, not from fear. Yeah. Now, this is a list sorting frequency. Again, it's sort of clear based on this name, but I'm looking here and this list is sorted pretty much in real time, or like every second. Yeah, you can see it right here. It's changing. Well, for the algorithm, they want us to specify the list sorting frequency. And I don't know how it relates, or whether or not it relates at all, to this value here. I'm gonna leave them by default. It's gonna be another research project. Price step filter and mark price filter I'm gonna leave by default. Now, this is where our Bitcoin activity comes in. We want to turn on other symbol delta and add a filter. So here we're choosing which market to look at, and here we want Bitcoin. This one, BTC USDT, and then it offers us to choose the delta. I will choose 5-minute delta in absolute terms, and the value is gonna be, well, in absolute terms it cannot be lower than 0, so 0 it is here, and here let's just put 0.5. We'll start off with that and then we'll see how it performs. Now this box is quite interesting. It says cancel if out of range. To me this means that if this condition was met and an order was placed, it keeps running, and even if the Bitcoin volatility exceeds this, if the order has already been placed, without this tick box, it remains intact. If you tick this box, then as soon as Bitcoin exceeds these limits, then the order is cancelled. I don't have an idea of whether or not either option is better. We'll leave it by default and we'll see what happens and if we can figure out the effect of this, having it on or off. Next, we've got the algorithm parameters. This distance is quite large. So I said that I'm going to use 0.6, and that's what I'm going to do. Next, the buffer. I've tried a buffer of 0.3. It worked okay on emulation. We'll start off here. Now, these two are quite interesting. Follow price delay and replace delay. The names are not really telling you much, but I better show you what these do. So just for fun, let's run these two. They are on emulation. Yeah, here immediately we see that MTL is on the active markets. So here, just zoom out. So follow price delay is how fast the order is following the price as it moves away from the order. It did it just now right here. And the replace delay is how fast the order is moving away from the price. You can see this at work right here. See, away from the price it moved. Now it's again catching up with the price because of this little shot. Okay, I will stop these algorithms now so that we don't get too distracted. Next, again, we have a choice between ticker price and trades data. In this little information bubble here, I've read that trades data is better, more accurate when you're using smaller distances and smaller quick buffers. So I'll use trades data because that exactly fits the bill. Next, order details. We'll leave this on the buy side and then we'll copy it and get a sell side algorithm as well. Now order size, I've settled on 30. Next we go to take profit. The number I've tried before is 0.25. We'll leave it at that. So if a shot is 0.6%, we expect it to roll back a bit more than a third, but less than half. We'll see how that works in real life. Next, we have our stop loss. I've tried 0.5. It worked all right. We'll start off there. Delay. I have explained to you the delay before in one of the previous videos. I'll leave it by default here. We'll see how it goes, and if I later analyze the trades and I see that a delay in the stop loss would have been beneficial, we could turn this on. And that's pretty much it for our algorithm. Let's just double check everything and we'll be good to go. All right, everything looks pretty good, so we'll save. Then we'll go full screen and we will duplicate this. This is the button for duplication, and here we need to change only one thing, which is the side. This will be my sell algorithm with exactly the same parameters for now. Save that. And here you actually can see the names. So we have A for active markets. This is what I put here manually. SG for shots group. Then we have the side, which is sell. Then we have the distance, 0.6. Then we have the buffer of 0.3. Take profit at 0.25 and stop loss at 0.5. That's a pretty easy overview of the main parameters of this algorithm, and when you extract your reports to CSV, that's the name of the algorithm is what you're gonna get. I've looked at it a little bit and it does not have the distance, the take profit, and the stop loss values, not that I could find. So it's quite important from this point of view to have your algorithms named in a pattern where you could easily extract these types of data. Okay, now I want to clone it again, but this time use an emulator, because the idea was to see, first of all, how the algorithm in real life is doing, but then also to compare it to the emulator, which is more or less perfect. Here I'm clicking this. Now it's on emulation. We save it. Here it's in red. Now we need to copy this one as well and do it on the buy side. Copy. Buy. Save. Now we have our group of 4 algorithms. Hopefully Binance will not be too mad that we're running so many orders. Well, at least we have 20 real orders, and then these ones are virtual. I will be stopping the remaining algorithms so that we don't get confused. And again, check everything. 30 USDT. This is important because why? Because this is real money here in the real orders. Okay, let's run these. Look in the orders. We have almost 40 orders, but here you can look, emulated are 19 and real ones are also 19. You can filter. Here are my real orders. Well, good luck to them. Another thing that we have to set up before the trades roll in is the auto stop filter. So here we use an asset which is USDT. Here you have 2 options, total USDT and just USDT. So this one is from spot, as you can see from the symbol here, and this one is from the futures market. This is the one we wanted. This gives it our baseline, which is 210 right now. And let's say as soon as I lose 3 USDT from this baseline, I want it to stop. It will use all of my algorithms, run. Yeah, here it is. Hope it's working. That's the last piece here. I will report to you when I have some results that I'm able to analyze. Ooh, I hope this works. Actually, immediately after starting these algorithms just now, I have a trade already. Whoa, I got 0.7 USDT, which is 7 cents, but it's pretty cool. It's been like 2 minutes of these algorithms running. Let's check them out here. Here is this coin. This is where we started with our algorithm, and look, immediately we have a trade. And it's a profit. It's 7 cents, but still, that's pretty cool. Let's see the size of this. About 1%. And our stop loss was far enough, and our take profit is right here. Woohoo! That's a very good start.